A reverse mortgage can solve a cash problem or create one you can't undo. It's marketed as safe and guaranteed, but the rules are more complicated than the ads.
This isn't anti-reverse mortgage. This is know the real rules before you sign. First, what a reverse mortgage actually is, in plain English. It's a loan against your home equity. The bank pays you. The loan balance grows over time. You don't make monthly payments. Instead, interest compounds and adds to the balance.
The loan becomes due when you permanently leave the home, by choice or circumstance.
Who qualifies? You must be at least 62 and own the home outright, or have low debt. It must be your primary residence. And federal law requires counseling before you apply. That counseling session is mandatory, and it's one of the most important steps.
Because this product attracts predatory lenders. The counseling helps you spot red flags. Now the part most ads skip, the real cost. Reverse mortgages come with origination fees, closing costs, mortgage insurance, and servicing fees. Many of these fees are charged up front, before you receive a single dollar. Then there's interest. It can be fixed or variable. And it compounds, meaning it grows fast.
Because you're not making payments, interest adds to the balance every month.
Trap 1. You must stay current on property taxes, insurance, and maintenance.
If you fall behind, the lender can call the loan due, even if you're still living there.
Fix. Set up auto-pay and budget for these costs before you ever apply. Trap 2. If your spouse isn't on the loan, they may lose the home when you pass.
Even if they're married to you, if they're not a co-borrower, protections may be limited.
Fix. Make sure both spouses are named as borrowers, and verify the rules in writing. Trap 3. You're borrowing against your home's value. That equity disappears.
If you plan to leave the home to heirs, they may inherit a house with little or no equity left.
They'll have to repay the loan, sell the home, or walk away. That's not always easy. Fix. Talk to your heirs before you sign. Make sure everyone understands the plan. Trap 4. If you move out for more than 12 months, the loan becomes due immediately.
That includes a long-term care stay. If you're in a facility for a year, the loan can be called.
Fix. Plan for long-term care scenarios before signing, not after.
Now the big question. How much can you actually borrow?
It depends on your age, your home's value, current interest rates, and existing debt.
You'll never get 100% of the home's value. It's usually a percentage, often much less than expected.
You can take a lump sum, a line of credit, monthly payments, or a combination.
The line of credit option can grow over time if you don't use it. One advantage. So when does a reverse mortgage actually make sense?
When you have significant equity, limited income, and plan to stay in the home long term.
Or when you're using it strategically, like delaying Social Security for a higher benefit. Or as a backup, an unused line of credit for emergencies, not everyday income.
When does it not make sense?
When you're planning to move within a few years, the upfront costs rarely make sense. When you can't afford taxes, insurance, or maintenance, it won't solve that problem. Or when better alternatives exist, like downsizing, adjusting spending, or family support. Always compare reverse mortgage to other options before signing.
Downsizing can free up cash and lower expenses without borrowing. A home equity line of credit has monthly payments, but often lower costs up front.
Or selling outright gives you full equity and removes the maintenance burden. Sometimes the real solution is budget adjustment, not borrowing. Reverse mortgages are tools, not miracles. They solve specific problems, not all problems. Here's your checklist before you ever sign. Step 1. Complete the required HUD counseling session and take notes.
Step 2. Get a full written breakdown of every fee, rate, and term.
Step 3. Compare at least 3 lenders. Fees and terms vary widely.
Step 4. Confirm spouse protections in writing, not just verbally.
Step 5. Inform heirs of the plan and the implications before closing.
Step 6. Confirm you can cover property taxes, insurance, and maintenance long-term. Step 7. Compare all alternatives. Don't sign just because it's offered.
Step 8. Have an independent attorney review the documents, not the lender's attorney.
Step 9. Take a cooling-off period. If you feel rushed, that's a red flag.
Remember, this decision is hard to undo, so slow down.
Quick recap. Know the real cost. Protect your spouse. Understand the equity loss. Inform heirs and explore alternatives. If you don't understand something, ask again. A good lender won't rush you. Red flags, high-pressure tactics, act now language, or refusal to explain terms clearly.
Green flags, patient explanations, full written disclosures, and encouragement to get independent advice.
Resources: HUD-approved counselors, AARP's reverse mortgage guide, and an estate attorney. Start at aud.gov for a list of approved counselors in your area, completely free.
This is a big decision. It affects your home, your heirs, and your future options.
So take your time, ask questions, and make sure it's the right tool for your situation. In the next video, how to coordinate Social Security, Medicare, and 401 timing.
Subscribe to Silver Dollar Cents. New videos every Tuesday and Thursday. Start with Social Security timing, then Medicare, then 401 traps, all on screen.
If you found this helpful, share it with someone considering a reverse mortgage.
One conversation with family before signing can prevent years of regret.
Remember, cost, spouse protection, equity loss, heir communication, and alternatives. Your home is more than an asset. It's security, memory, and peace of mind.
Thanks for watching Silver Dollar Cents. I'll see you in the next one.
Watch Social Security timing next. Then Medicare costs. Both are on screen.
And if this video helped, hit subscribe so you don't miss the timing strategies.
Your future self will thank you for doing this research now.
See you in the next one.